Loans 301. Understanding loan terms. You will learn here the key terms of a loan and important things to be aware of if you have to take a loan. Many people get trapped in taking bad loans because they don't understand the terms. You need to ask yourself a few questions. What is the total amount I will have to pay back? Let's consider this example. You want to borrow $1,000 to buy a motorbike and plan to pay it back over 1 year. You make a repayment of $106.50 every month for 1 year. In total, you will repay $1,278. The interest cost is the difference between the total repayment, $1,278, and the amount you initially borrowed. $1,000. It makes $278. This is a lot compared with the $1,000 initially borrowed. Many lenders will try to ensure you don't realize it by only telling you about the monthly installment, here $106.50. Always check the total amount you will have to pay back and compare it with the initial amount you borrowed. Is it worth taking a loan, or should you save first instead? The second question to ask yourself is, what is the monthly installment, and can I afford it? Paying back your loans as quickly as possible is better, so you pay less interest. But always make sure to budget properly and ensure that you can afford your monthly installment. At any point, you should know how much you still need to pay back. You can ask your lender what your loan balance is at any time. The balance is the amount of money you still need to pay back. For the motorbike example, at the beginning of the year, your balance is $1,278, the total repayment amount including the principal and the interest cost. At the end of the year, when you have paid back your loan and the interest cost, the balance is $0. Knowing your loan's balance will give you clarity over your budget. Another question to ask yourself is, what is the interest rate, and is it legal? Many people get confused about interest rates. Moneylenders will very often try to make the interest rate look small by only telling you the monthly interest rate. The monthly interest rate is the annual interest rate divided by 12 months. In the motorbike example we discussed earlier, it is 48% divided by 12 months, which makes 4%. Don't be fooled by small monthly interest rates. Multiply them by 12 to find out the annual one. Compare the annual interest rate with the maximum legal one in the country where you take the loan. In Hong Kong and Singapore, loans with an annual interest rate above 48% are illegal and are already considered extortionate. You also need to check if there are other fees and if they are legal. In some countries, extra administrative costs may be added to the loan cost when you take it. Be careful, as they may be illegal in some countries. To know the interest rate, including all extra fees, you can ask for the APR, which stands for the annual percentage rate, which refers to the total cost of your borrowing for a year. When comparing money lenders, ask for the APR. In many countries, if you fail to repay the loan on time, you may have to pay a penalty fee, late payment fee, and interest surcharge, on top of the interest. But the moneylender can often charge you a maximum fee. There is one last loan term we want to discuss now. It's very important to be clear about the consequences of signing as a guarantor or a witness. A witness has no obligation to repay the loan. But a guarantor agrees to repay the loan if the person who borrowed it cannot do so. Only sign as a guarantor if you are ready to repay the loan. If a moneylender asks you to repay one of your friends or family members' loans, check that you signed as a guarantor, not a witness. Many moneylenders will try to make you pay even if you only signed as a witness and not as a guarantor. There are 3 other important things to know about loans in addition to understanding the terms. First, only borrow money from a licensed moneylender. Borrowing from individuals online or a friend of a friend is dangerous. They are often loan sharks who will charge you very high and often illegal interest rates. They will harass you and your employer if you don't pay back on time. Secondly, be aware of the laws in the country where you work. For example, in Singapore, Restrictions are placed on the total amount of loans a migrant domestic worker can take. It's also illegal to borrow from an unlicensed moneylender. You risk your visa being cancelled if you do not follow the rules. Finally, avoid loans with a compound interest rate. There are different types of interest rates. We have discussed a simple interest rate in the examples above. Compound interest is when interest due is not paid and then added to the loan's principal, which builds upon itself, so repaying the loan takes more time. Avoid loans with compound interest. This is often the case with credit cards. Please also note that the calculations here are approximate due to rounding in the monthly repayment calculation.